Hi guys, how's it going? It's I'm checking and welcome back to my YouTube channel. We are here today because I made a mistake as a dividend investor. We know that one of the most preached ways or the most common ways to make money in the stock market is to buy low and sell high, and that's what I was trying to do, but then I did not achieve what I was hoping to achieve. And because of that, my Easyequities ZAR account is bleeding. I literally went from 10% returns to negative percent returns, and that's not what I was hoping to achieve. I don't even know what I was thinking. I did not think this through. So let's get into it. I'm gonna share my portfolio and see how terrible my portfolio is looking because of this one thing that I did. And I'm hoping that by the end of this video, some dividend investors will actually realize that this is not the way to go about it for dividend investing, because the buying low and selling high, it does work generally, but for dividend investing, it is not going to be as beneficial as it would be for growth investing. So stay tuned and see my mistake, and maybe you will learn from it. So this is my Easyequities ZAR account. I currently have 15,000 invested and I am down 4.08%. And thinking that the week before last, I was on green. I think I was 4% up. Yes, 4% up. And looking at this now and realizing that this is because of the mistake that I made is actually so devastating. I feel dumb right now. I feel dumb. It was a very stupid move from me, but we learn from it. I guess that's why they say that we need to start investing as early as possible. Yes, for compound interesting, but on the other hand, to just be able to rectify our mistakes because we have a lot of time in the market. So this buying low and selling high thing, I did it to my individual companies, because when it comes to my TFSA, my ETFs, I don't touch those. I don't play with those ones. So I thought I was being smart by trying to play with the individual companies, and I did not achieve what I was hoping to achieve, right? So the ETF, One Invest Infotech, I did not touch it. I did not touch it. So I have XOXO and First Rent, Premier Group, Storage, and Tungela. And Tungela also, I did not touch it because I was on a loss. I've always been on a loss with Tungela. I don't know if any of you have it, and where are you with it? Are you on a profit or are you on a loss? I don't know, but me, I'm on a loss. So I did not do anything to Tungela because it was not on a profit. So as I've mentioned, that I was actually looking to sell high and take the profits. So what I wanted to achieve was to take the profits and invest back into that very same company that I sold my shares in, and then buy more shares. But then it did not work out the way that I thought it would work out. Not only am I now on loss because market volatility, but I did not even get more shares as I was hoping to. So I did not think this through, that it is actually not going to work, right? Because if you think about it, if you now have 1,000 rand invested and it has yielded you more returns, and you have 1.5 invested, you are actually on a 500 rands profit. But the problem with Easyequities is that you cannot only sell your profits and take them. When you sell your profits, you're actually selling your existing shares, because those profits are actually from the share price, right? So they take it as one share was 50 rands and then now it's 100 rands. The second one was 50 rands and then it's now 100 rands, something like that. So when you sell your profits and decide to take them, you are actually selling your shares. So it's very much impossible that you are going to just sell and take your profits. It does not work like that. So what I was hoping to do is sell my investments, take those profits and buy more shares. But as I said, that I did not think about it thoroughly, because if I bought the shares at 50 rands and then they are now 100 rands, then one share currently cost 100 rands. And if I have 5 shares, all of them currently cost 100 rands, right? So it doesn't matter if I bought the shares at 50 rands and then they are now 100 rands. When I decide to take my profits and I invest again and hoping that I'm going to get maybe 5 more shares, I am going to end up buying the very same number of shares that I had in the beginning. Because the 50 rands, when I bought, now the 100 rands and I'm up 50 rands. So when I buy that share again, I'm going to buy one share because it cost 100 rands, not 50 rands anymore. So what I was trying to do was buy more share, as I say, but I did not think about it that I will actually remain with the very same amounts of shares as I did before. So that being what I was trying to achieve, in hindsight, actually, I was not even supposed to touch my shares, try to sell my profits because I did not achieve what I was hoping to achieve. I had in storage, let me see, just that I have some pending purchase, but let's say I had 200 shares, right? And obviously they'd gained value. I think in storage I was up 14%. They had gained value. I sold my entire holding. How much do I have? I sold 2.7, all of it, right? And when I now went back to buy again, I actually bought, or the 2.7 afforded me 200 shares. And I was so surprised that, why is it like that? I was even thinking that, okay, is there something wrong with Easyequities? Because how is it that I made a profit and I'm taking my profits and I'm buying more shares and I still get the very same amount of shares that I had? But it's for the very same reason that I'm explaining that if the share was 50 rands and then it's now 100 rands, when you buy it again, you're going to have one share because it will cost 100 rands. So my mistake was actually not thinking about it that, okay, Lerato, this will not give you what you are looking to get. And I am so very much heartbroken now that my portfolio is bleeding, right? But if you look at it from the side of growth investing, right? Now when the share price appreciates from 13 rands maybe to 15 rands, right? And I have 2.7 invested, that maybe 3% share movement is going to be now on the 2.7. Like maybe if I had not sold my shares and I was maybe like having 2.5 and a profit of 200, now that 3% upward movement of the share price was going to be on the 2.5, not on the 2.7. And when I have 2.7 invested and my holding is up 3%, it is going to be more than when I have 2.5 invested. So I guess this move is actually beneficial to growth investors, or from a growth investing point of view than a dividend investing point of view, in a sense that you want to get more shares. So if you want to get more shares, just don't do this. But if you want capital growth, that when now this holding goes up again, it will now go up from 2.7 capital invested instead of the 2.5 capital invested. So this move actually for dividends did not work, and that was my mistake right now, because I was doing well. It was performing very well. XOXO, I think I was up 5%. First Rand was up 10%. Premier Group was up 12%, I think. Storage was up 14%, and Tingela, I did not do anything on it because it is currently on a loss. So that is my mistake, and I just hope that if you are looking to sell your shares, take your profits with the aim of buying those shares in that very same company again, is actually not going to work if your aim is to buy more shares, as I say. But if your aim is to get capital growth, then it definitely works. But for getting more shares, it does not work, and just don't do it. This is a message, or rather a tip to dividend investors, that don't do it. Just do not do it. Like, you'd rather just leave the holding at its profits and just keep it moving. Just leave it like that. But if you are going to sell hoping that you're going to get more shares, you're not going to get more shares. You will still get those 5 shares that you had before you sold your holding. So that was my mistake, and I thought I was being smart. I thought I was being smart, you know. But if you are going to try and make a move, actually just think about it and see if it's going to benefit you the way that you are hoping that it will benefit you. Because sometimes we make mistakes and we realize later that, oh my goodness, that was a mistake and I was not supposed to do it. But at the end of the day, this thing is a journey and we learn. You know, for you to learn you have to make a mistake, or somebody has to make a mistake and you just learn from them and not make the very same mistake as they did. So yeah guys, that's it for today's video. I just thought I should come on here and share that, as I've said when I started this channel, that I'll be sharing my journey, and that includes the mistakes that I feel are a mistake. Somebody might think that, okay, no, it is not that much of a big deal, which is not. But for what I was trying to achieve, it is a mistake, no question there, because I did not get the outcome that I was hoping to get. But more than anything, I just hope that this was very much insightful to someone who is in the market already, or who is looking to start and is wondering how they're going to make money from investing, maybe in the form of dividends. But what I can say is that just keep on adding to your portfolio, buy more shares in that company. Don't just think that, okay, you will sell and then buy more shares, because it is not going to work. Let me not talk too much. Thank you guys so much for watching. I will see you next weekend on my next video. Don't forget to like, comment and subscribe. Bye.